I think I'd like to go straight into the questions, right? But before I do that, our panel today, which is Business 101, will talk about the obligations of a business, right? Earlier from the other panels, we heard some great information regarding best practices, business tips, how people fulfill dreams, right? And how social media is so important to market and diversify and extend, right, your services so that the rest of the world knows what you're doing, or at least your community, right? But in addition to all those fun things, right, there's also some serious items that we have to discuss for a business to continue producing and be within the law as far as taxes are concerned, and employment, right, and responsibilities that businesses should know about. So today we're going to go ahead and start with Lisa. Alrighty. So Lisa, according to a survey by the National Federation of Independent Business, respondents said that finding qualified workers is their single most important problem. So your question, Lisa, is the following. What are job seekers looking for, and how can a business owner reduce turnover and find qualified workers?
Thank you that's a great question. That's, as manager of a staffing agency or in personnel, we're faced with that same problem that all employers are faced at this time. The local unemployment rate is 3.6. Thank you, Rogelio. 3.6. And so it's tough. It is tough finding employees, qualified employees. I think that right now the local employment force is about 4,000 employees at this time. So right now, to try to attract employees, they're mostly looking for wages, higher wages, obviously, benefits, flexibility, and location. It's all about location as well. So if you all are having a difficult time finding qualified employees, that's somebody who can e-verify, pass a drug screen, a criminal background check, you're not alone. But they're out there. We just have to attract them a different way. And by those 4 different incentives is a way to do that.
Okay, great. Thank you, Lisa. So the next question is for Mr. Rene Garza from the Texas Workforce Commission. So on the topic of if a small business already has employees working in Texas, of course, they'll need to pay Texas unemployment insurance tax. Your question is, when are employers liable for the unemployment tax?
There are various circumstances when a business becomes liable for the state unemployment tax, but generally speaking, for regular businesses, it's after you've paid $1,500 or more in a quarter. Once that has happened, you go online at our website at texasworkforce.org and register for a state unemployment tax account. Once an account is established, you will start filing and paying your unemployment tax every 3 months on a quarterly basis.
So an employer needs to pay taxes to the Texas Workforce Commission for unemployment benefits, correct?
Yes, that is correct.
Okay, wonderful. All right, thank you. Mr. Eloy Gutierrez, our certified public accountant. So if you're new to business, it is important to understand your tax responsibilities. So the question, Mr. Gutierrez, is, what are the most common tax filings and obligations for a new business?
That's a very good question. Let me start by saying that there's been a lot of success stories. The presenters and the panelists from this morning are talking of how they've had a lot of success in the community, growing their businesses, going internationally. And part of being successful is knowing your tax obligations, knowing all your tax filings, your tax obligations, so that there's no surprises. But we see in practice, what I see at my CPA firm is some small businesses coming in and not knowing about a franchise tax, or that self-employment taxes is 15.3%, or SUTA tax or FUTA tax. So the more you know, the higher the probability of that you're going to be successful and you're going to continue to grow. So Some of the fundamentals, some of the basic taxes, we all know income tax, your federal income tax. We all know sole proprietors, when you file your Form 1040, whether you're a corporation, a partnership, an S corp. Another key takeaway is the type of legal entity. What kind of legal entity did you register? How are you operating? Are you being tax efficient? Are you mitigating your tax liabilities? Are you just paying your fair share, or are you overpaying? For lack of planning and lack of being aware of your tax obligations. So income tax is one. Self-employment tax is something that I would really like to emphasize for sole proprietors, for general partnerships. 15.3% of your net profits. Don't let that catch you off guard. At the end of the year, you need 15.3% of your net profit. That's going to be your self-employment tax. So make sure you're aware of that. Make sure you're planning for that. Franchise tax, for those businesses that are doing extremely well and encountering and experiencing a lot of growth, once you surpass $1.1 million in gross sales, and I know you guys will get there eventually, just keep working hard, you're subject to the Texas franchise tax. So also you have to be aware of that and make sure you have cash reserves and you're leaving some money for all your tax obligations. Self-employment tax is synonymous to payroll taxes. If you're an employee, you're paying payroll taxes. Social Security, Medicare, which is 7.65%. You're paying SUTA tax, the state unemployment tax. You're paying FUTA tax, 0.06%. It's synonymous, or it's the same thing as self-employment tax, that if you're not an employee and you're a sole proprietor, you'll pay the 15.3%, but at the end of the year. Don't let that catch you off guard. Either send estimated tax payments to the IRS, or make sure you save some money to be able to pay your taxes at the end of the year. So those are the primary taxes that I see, but I mean, the key message here is know your tax obligations, plan for them, don't let them surprise you, to promote your chances of being very successful. You want to continue to grow your business and not have any setbacks with your cash flow.
Excellent advice. I think what I hear from all of our presenters is planning is the key, right? Planning. So as a business owner, you have to plan everything. So we're going to go back to Lisa about hiring through a staffing agency versus hiring an employee yourself. Could you give us some pros and cons over that, please?
Certainly. And tying it back to what Mr. Gutierrez is saying, business owners have enough on their plate, such as preparing taxes or tax preparation or just the operation of the business. When they need employees, they turn to us because they need employees and they need them now. So one of the benefits, there are many benefits of hiring a staffing agency, not just because I work for one, but I see it. You call us, you give us a job order, you give us a full job description, and it is our job to recruit, screen, and pay that employee. We're responsible for all the federal and the state taxes, responsible for providing them with a W-2 at the end of the year. So that frees up a lot of your time to run your business and to grow your business. And there's a misconception that temporary employees are temporary employees. They don't come with the skill sets that are needed, but that can be further from the truth. We have plenty of employees who can meet the demands of the workforce today.
Great, that's great information. This next question is for Mr. Rene Garza. So if an employer does decide to, or decides not to go through a staffing agency, wages come into play, and wages, of course, are the compensation provided to someone in exchange for services or labor. Could you describe, Mr. Garza, the different types of taxable wages?
Okay. Yes, that's a very good question. It's a common question that I get when I'm conducting an audit or an investigation. Wages by state law can almost be anything. It's anything that you exchange or pay the employee for. So, for example, hourly wage, that's reportable and taxable. If you pay them a salary, it's reportable and taxable. If you pay them a commission, it's reportable and taxable. Just like, for example, the salesmen who work at the car dealerships, those commissions are reportable and taxable. If you pay them a Christmas bonus gift, that's reportable and taxable. Or if you pay them some just kind of a bonus for doing a job well done, reportable and taxable. If you pay them by the mile, like for example, trucking companies, and there are a lot of them here in Texas, who pay their drivers by the mile, it's also reportable and taxable. Ultimately, if the Texas Workforce Commission conducts an audit or investigation and we make a finding that you as an owner are exercising substantial direction and control over their work, then whatever money that you pay them or whatever medium of exchange you pay them will be reportable and taxable.
So on that same note, what is the recommended way for an employer to file their taxes?
The recommended way, as stated previously, would be to file online. We're always pushing our employers to report their employees every 3 months electronically at our website. The benefit of that is when you have access to your account online, you can get a confirmation number for the report, you can get a confirmation number for the payment that you submit. You can always look at your history. You can review who you paid in previous years, and also you can review who is filing for unemployment against your business or what chargebacks have been assessed against your account, which could conceivably drive your tax rate to go up or go down or stay the same.
Thank you. The next question is for Mr. Gutierrez. So staying organized is very important as a business owner. When does record keeping begin?
Okay, that's another very good question. Record keeping begins the minute you start spending money on your business. One of the common questions at the firm, what we see at the CPA firm is, hey, I paid for a business expense out of my personal funds. Or, hey, I borrowed money from my father or my mother. No matter the source of the money, start tracking your expenses the minute that you're incurring them. Track all your expenses. One of the best practices that we recommend is get a scanner, scan everything. Get a scanner, use a paperless office, scan everything into a digital folder. That way you have everything very organized, and that way you can access the information extremely easily. The other thing is, don't commingle funds. Another best practice is don't commingle your personal funds with your business funds. Don't say, hey, I have a checking account where I paid half of the expenses are business, the other half are personal. You're commingling funds. If you have a legal entity that you registered, commingling funds it's a big no-no. Attorneys can try to pierce the corporate veil, like they say. So don't commingle funds. Get a scanner, scan everything. Use an accounting software. Mm-hmm. Nowadays, I know that most small businesses are using QuickBooks Desktop or QuickBooks Online. Use an accounting software to help you track all your expenses. All these best practices, we go back to making sure that you're knowing you're tracking your income and expenses, your profit and loss statements, your balance sheets, doing your bank reconciliations on a monthly basis instead of waiting till the end of the year, so that you know your cost. I know that the previous panels were talking about knowing your cost, contain your cost, come up with cost-saving strategies, and always keep your eyes on your profit margins. So these are all tools that keep you organized and increase your probability of being successful and continuing to grow your business. So record keeping starts day one and it continues so long as you're in business.
Thank you. That's very important to know. Lisa, your next question. Earlier we talked about retaining employees and finding qualified workers. So once we find those individuals, should businesses have an employee handbook? And what are some critical sections and newer content that owners typically overlook in these handbooks?
Definitely. Employers need an employee handbook. Not only does it stipulate all what's expected of the employee, but it also gives the company a more professional sense. An employee handbook is very important because it talks about, well, it details labor laws, it talks about FMLA, it talks about disciplinary processes, pay periods, where you can park, where you can't park, how you're to dress, how you're not to dress. That employee handbook can get you out of a lot of binds, especially during unemployment claims. Most employees will say, well, I didn't know. Well, yes, you did, because you were handed an employee handbook, and it stipulates everything there, that's important. So it protects a company in legal proceedings as well. So if you don't have an employee handbook, I strongly recommend that you get one. Not a lot of small businesses it's the majority of the companies here small business? Are you all small businesses? Raise your hand if you're a small business.
Yes, and SBA defines a small business as less than 500 employees.
Okay, so less than 500 employees. Okay, and how many of you all have employee handbooks? Okay, so that's several of you.
Okay.
Have you all, well, I guess we can get that to the Q&A, but you all
Yes.
obviously know the importance of having an employee handbook.
Okay, thank you, Lisa. So we have time for one more question, and I'm going to direct this question to Mr. Rene Garza. So the question is an employer required to pay unemployment tax on undocumented workers?
Yes. Undocumented workers must be reported, and their taxes must be paid based on whatever wages you pay them. Given the region of the country that we live in, there are businesses out there that do hire and pay undocumented workers, and they do have to be reported. Many times I've had these business owners tell me, well, they're never going to qualify for unemployment benefits, so why bother? That may be true, but it still doesn't change the fact that because they're considered employees, their wages are reportable and taxable, and it must be paid to the state as well.
What if I hire my family to work for me? Do I need to pay unemployment on them?
That depends on the circumstances. Generally, if you're a sole proprietor, a small business, if you hire your mother or your father, and if you're married, if you have a mother-in-law, father-in-law, you do not have to report them or pay the tax. If you have children working for you, but they're under the age of 21, you do not have to report them. However, once they turn 21, you must report them. That's basically, in a nutshell, the only family members that you're required to report. If your spouse works with you, you do not have to report your spouse's earnings, even if you give your spouse a W-2. And again, remember, this is a sole proprietorship. Because in the state of Texas, your spouse is not considered an employee. Your spouse is considered an employer or a co-owner of the business. Now, if you are operating as a limited liability company or a corporation and you have relatives working for you, like the ones I mentioned, then yes, all of them must be reported and all the taxes must be paid based on their earnings or the wages that you pay them.
Great, thank you. That was very good information, and I believe now we are going to open it up to questions and answers.
Oh, geez. I have a question going back to what you said about the minimum requirements to start paying unemployment tax, and also kind of going in with that. Is there, once you pass that limit, you don't then have to go back and pay unemployment tax for previous employees, do you?
Are you referring to the $1,500 rule that I mentioned earlier in a
Right.
quarter?
Right.
Yes, once you've paid that $1,500 in a quarter in gross wages, whether it's for one employee or 10 or 100, you establish an account online at texasworkforce.org. The system will assign you an account number. And then from that point on forwards, for as long as you are in business and for as long as you have employees, you will pay every quarter the taxes that are due based on the employees that you paid in each quarter.
Yeah, and then, but that doesn't mean that any previous employees can now qualify for unemployment against you if you weren't signed up for the unemployment tax at that time, right? It's
You mean-
only from the time you sign up forward?
Right, but it could go retroactively if an audit or investigation reveals that you had employees maybe a year or two back. It just depends, but I'm not sure I'm understanding your question, but I know that once you are liable, you must pay the taxes going forward.
Okay.
Yeah. Now, presuming you didn't have anybody else before that, then there's nothing to tax.
Well,
Right.
and I'm guessing it works the same for a nonprofit. and they're being very careful about not exceeding the limit because they're under the impression that once they start paying unemployment tax, their very first employee 9 years ago can now come and claim unemployment.
Right, that's correct. There's a base period that when an employee files for unemployment benefits, they look at the previous year's earnings, and that's about as far back as they go. There's like a base period. They don't look at what they earned 8 years ago, 9 years ago, 7 years ago. It's like the past year or so.
Right, but they would have had to have been employed within that period.
Right.
This person is very worried that somebody, for some reason, they think that an employee that they had 9 years ago who no longer works there and hasn't worked there can now come back and claim unemployment.
No,
if
not
he
that
starts
far,
paying
no.
unemployment. All
Not that far back.
All right, thank you.
Uh-huh.
Good afternoon. My name is Yesenia Escobedo. I am from Laredo, and I just started a company. And what I do is I offer online services. So I have courses. Actually, just so you guys know, I do social media marketing. So I've been taught by some of top experts out there. And so this is something you can actually use if you're budgeting. But my question is on sales tax. Because my businesses are online, I have 2 businesses online, then what is the sales tax? Is it applicable to me because of the type of product that I have and it being online?
I guess I'll go ahead and field that question. You have a very interesting question. There's a lot of legislation right now taking place regarding sales tax on e-commerce. Right now, it used to be, let me take you back a little bit. It used to be that if you had a physical presence in a state, you were required to collect sales tax or remit sales tax to that state if you had a physical presence in that state. That would define that as nexus. Now, there's no longer a physical presence requirement. Now, they use a gross sales requirement where depending on the gross sales in the state that you're conducting business with, you may be subject to that state. There are some exemptions. I recommend you Google Wayfair. There's a Supreme Court case that just came out recently. It's called Wayfair. It's South Dakota versus Wayfair. And what they're saying is that once you invoice more than like $200,000 to that state, you will be subject to sales tax in that state. There's going to be thresholds exempting certain levels of sales tax in all these states in the continental USA. But right now, the states are addressing that. It's not very clear as of today.
Okay, so if I do market across the nation, then I would have different sales tax?
That is correct.
Okay.
Only if your gross sales surpass a certain threshold.
In each state?
Right now, the individual states are defining those thresholds. They haven't defined the thresholds, but they're using a rule of thumb of about $200,000. So the first $200,000 you don't have to worry about, but if you do have more than $200,000, you're going to have to collect and remit sales tax to the different states. That is correct.
Okay, thank you.
And just as an additional takeaway is the accounting softwares like QuickBooks. That's the one that we use. But I mean, any accounting software now they have artificial intelligence embedded in the software, where it'll calculate all of those sales taxes for you automatically. It works on origin of the delivery and the destination of the delivery, and it'll track everything for you. So I recommend you get a software that tracks your sales tax obligations throughout the United States.
Can I add on that? Can I add to that? On the gross sales requirement, I'm in a similar situation where I do websites and search engine optimization. It was my understanding that I have to pay sales tax when I deliver a website to somebody because that's considered a product. But like the consulting aspect of it is a different thing where I don't have to pay taxes. So I'm trying to structure my billing so that it doesn't get too crazy and out of hand. Is that going to be replaced with the gross sales tax requirement?
No, that's not going to change. That will not change. Services in general, the presumption is services are not taxable, talking about your consulting services. So that is not going to change. What's going to change is that they're redefining what they call nexus. Nexus means the physical presence that you have in a particular state. Now you don't need to have a brick and mortar store in a particular state. Now you just have to have sales to customers in that state. So if those sales to customers in that state surpass the thresholds, you do have an obligation to file sales tax reports to that state as well.
But it's still whether or not it's taxable is separate from.
Yeah, that's not going to change. That's not going to change.
Any other question before we close on panel Business 101? No? One more. Okay, we have a question.
Okay, so how exactly do you report undocumented workers if they don't have a social security?
Good question. I almost anticipated it. Of course, you ask them if they have a social or a TIN number issued to them from the IRS. They might have one, but if they don't, there is a way to report their social security number every quarter. It's what we call like a pseudo number or like a dummy number or a fabricated number. As long as it looks like the 9-digit number of the social security number, just make it up and put it in there and make sure you keep in your records what social security number you assigned to that person so that you can track them every quarter as it goes in. Because before, it used to be that we had no way of reporting undocumented workers because they didn't have a social. Well, now we permit the employer a little bit of leeway in letting them or letting the owner make up their own social, just keep track of it, and then put it in the system on the internet, and it'll correctly calculate the tax due. But that's a good question.
Anyone else?
Good afternoon, Erica Martinez from the City of Laredo Health Department, but on a private business aspect, a follow-up to your information right now, assigning a dummy social security number, don't you risk duplication of someone's actual social security number?
The method that we use at Texas Workforce, where are you? Oh, there you are. The method that we use at Texas Workforce Commission is we basically, we take your TWC account number that we assigned to you. And what we do is we replace one of the digits with the number 9, and that's the number that'll be used for that undocumented worker. And if you have another one to add to that, then we just change another digit and add it to that. It's not like a social security number that you will typically see that starts with 466 or 56, or this is going to be a number that starts with the number 9. And that's how we assign those pseudo or dummy numbers.
Thank you for the clarification.
Yeah. If you need assistance on that, you can always contact a local Texas Workforce Commission tax office, and we'll show you how to do it.
Okay, done. Okay, well, thank you again, panelists, Eloy, Lisa, and Rene, for such important information. I know that we were discussing earlier that it's not the most fun part of the business or running a business, but it's definitely a key element, because without paying, or if we don't pay our taxes, we can get into a lot of trouble and serious trouble. So please, if you need additional information, the panelists will be here, and also contact us at the Small Business Development Center. Thank you so much and enjoy your lunch.
Thank you very much. Thank you.
Thank you.
Thank you very much.